Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. The markets have been down for a while now, and this gives us an opportunity to look for great companies at discounted prices. Some of you have asked me to look at a specific company, and I'm going to do that today. I'm going to give you an overview, and then of course if you're really interested, do your more research about the company, learn about what they do, how they do it, who their customers are, the types of products they sell, and so on. And like I've always said to you guys, I'm not a financial advisor. I'm just sharing my journey here, and I'm explaining, some of the information that I found on the internet and so on. So please always do your own research. Before we do that, it will be absolutely amazing if you can give the video a like, because that really helps the channel. And of course, as always, join us on the Patreon account, where you can actually get access to the Discord and the Sharia compliant ebooks, as well as all the different trackers that we use. The company we're talking about today is Hershey Company. The Hershey Company is a snack company. They sell all types of products. I'm sure you've seen this. And if all the snacks that they sell, anytime you go to these shops basically and you're buying products, whether you're buying snacks, you probably would have seen some of the basic products they sell, including Kit Kat and Kisses and all of that. So what I would like to do now is just to look at basically what's going on with this company in terms of financials, the things they sell, and the company, how the company is doing generally. Because sometimes it's not about the company. Okay, what I mean by that is the fact that the stock is down is nothing to do with the actual products. It's more to do with the overall markets, and I think that might be the case for this company, but we will look at it in a second. Now, the 52-week low was $160 and $186 per share, and right now it's about $190. So it's slightly off the 52-week low, and that's one of the reasons I've been asked to look at it. But you can see a year to date is down almost to 16%. So I'm going to look at the financials in a second of this company. But before we do that, I just want to give you an overview of the recent report that they've had. And one of the things that I've noticed very quickly is the company are doing really well in terms of the net sales. So in comparison to for the 5-year growth compounded annual growth rate, when you look at the S&P 500, the food sector, okay, has done about 3.7 in the last 5 years. This company has done double that almost, okay, 6.8%, which is absolutely amazing. In terms of adjusted EPS in the last 5 years, this company has done about 12.3. The markets, the S&P 500, the food sector, has done only 2.7%, which is absolutely amazing to see. And this is the kind of company, I'm not saying because they've done this, it's going to happen again, but it gives us an idea of where the company has been. And hopefully we will see, based on what the analysts expect, if this is basically a reoccurring situation or if this was one-off. The other thing that impressed me about this company is the adjusted earnings per share. From 2017 to 2022, they moved from $4.76 to $8.52. So they doubled in that period of time. When you look at the operating cash flow from 1.2 billion to 2.3 billion from 2017 to 2022, and in terms of dividends, from $2.55 per share to right now $3.87. Okay, that gives us almost a 9% growth in that period of time. It's absolutely amazing, because as a dividend investors, this is very good, because remember the dividend comes from the free cash flow and so on, and if their operating free cash flow is increasing, okay, the net income is increasing, the dividends then of course it can easily increase, and that's a very interesting thing to see. A couple of more things that really impressed me about this company, and you can find all of this on their website. Look at this adjusted gross margin for the calendar year for 2022, which is basically, they haven't finished 2023. This is based on 2022 information. You can see the Hershey company had 44%. The next company was 37%, and then so on. So this is basically their competitors, if you like. These are the other companies that sell similar sort of snacks. So the adjusted operating margins, which is very important to all of us, is 23%. Next company was about 18%. So that's 5% difference. So it's absolutely amazing to see they actually on the top of their game when it comes to the snack sector. In terms of free cash flow from operations, you can see from 1.2 to right now 2.3. Again, that in the last 5 years is the compounded annual growth rate of 13%, over 13%. I don't know about you, but that's very impressive for a consumer staples company. One of the things the company talked about is the capital allocation strategy to support growth and create value for shareholders. Again, we are their shareholders. It's important to us to make sure the company is actually taking care of their shareholders. So what are they doing? Business reinvestment, including which is basically the M&As, which is one of the basically ways this company grows. So they find other companies they can acquire, okay, and basically either merge them together or basically acquire those businesses. Whatever they do, basically they grow that basically their business by reinvesting that money into other companies and buying other companies and so on. The dividend yield, okay, they basically saying maintain a dividend yield payout of more than 50%, which is absolutely huge for us. Share buyback, so they're buying back their own shares, which is really good, and then they're reducing debt. And these are the 4 fundamentals for basically shareholders. If the company is growing their business by acquiring other companies or organically growing their business, okay, reinvesting in that basic research and development, buying other companies and so on, they're paying you that dividend and increasing that dividend, okay, which is very important. They're buying back their own shares, meaning the shares that we basically own are now worth more, and they're reducing debt by basically, okay, that helps the business as well because they no longer need to pay that interest and so on. Just one last thing on this one: strong, visible, and consistent deliver long-term algorithm and net sales growth. They're expecting about 2023 about 6 to 8%, adjusted EPS growth of 9 to 11%, which is absolutely huge. And then from there onwards, you can see they kind of predicting about 3 to 4%, okay, then 7 to 8%, 2026 plus 2 to 4%, and 6 to 8% in terms of their net sales growth as well as adjusted EPS growth. Now the rest of it, let's look at the rest of that information. As we've seen already, the company is HSI, okay, and it's in the consumer staples section, currently trading $191, EPS at $8.27, market cap of $38 billion. It has a wide economic moat. Beta is very, very low because it's part of the consumer staples. PE right now 23, forward PE of 19, 5-year growth, basically 5-year average of PE basically 25. So when you look at this, you can sell straight away is slightly cheaper than where it has been in the last 5 years. The sector right now is about 21%, the S&P is about 24%, and free cash flow right now we're looking about 23. So it seems basically either fairly valued or slightly cheap. Dividend yield, we're looking about 2.3, payout ratio 45%. Latest dividend increase was 15%. The 5-year growth rate of basically is 9%. The dividend growth rate of 13 years. The annual payout $4.77. Dividend safety, we're looking about now 93%, which is absolutely huge. Free cash flow right now $1.65 billion. Free cash flow yield of 4.3 and free cash flow margin of 15%, which is absolutely amazing. Now, in terms of profit margin, we're looking at about 16%, 22% in terms of operating margins, return on equity 54%, which is huge. The 5-year total return in the last 10 years, is almost 9%. Return on invested capital 22%. Revenue in terms of compound annual growth rate in the last 5 years, we're looking about 7%. Current rebate ratio is above 1, which is really good. The next year, they're expecting the earnings to grow about 7 to 8%. This comes from Yahoo Finance. And growth estimate for the next 5 years for every single year per annum, we're looking about almost 9%. Current price 191%, $191 per share. According to Morningstar, they're saying it's 196, so that's about 4% discounted right now. According to Simply Wall Street, they're saying 22% discounted. They expect the price to be $242 per share. Now, Tip Rank is saying 253. and basically they're expecting the earnings. They're basically saying it's a moderate buy. It's almost 35% upside from where it is right now. The average price for Seeking Alpha is 244, and Seeking Alpha is saying it's about 30% upside from here, and according to them, it's actually buy. In terms of Sharia compliance side of things, there's no issues with this company. It's actually quite nice for consumer staples, and they have been buying back their own shares, which we've seen from their own presentations. So in terms of basically what I would have done, this company, like, is definitely on my watch list. I'm not sure if I'm gonna initiate basically a buy right now or new position. So I'm gonna keep an eye on it. It's on my watch list. I'm looking around. Maybe if it drops another 4-5%, maybe 6% or so, to give myself at least a margin of safety, then maybe I might initiate a new price, because I don't own any snack companies right now in the portfolio. So it will actually be quite good. And my consumer staples section, or the sector, I don't actually have that many companies. Majority of them are either cleaning products and so on. So this will complement the portfolio. So hopefully it will drop down another 4-5%, because right now today was up at almost 2%. Between today and yesterday, I think it was last 5 days is up, actually down still, but yesterday I think it was up about 1%. Today is up almost 2%. For that reason, that's why it's actually gone up from the 52-week low. So I'm gonna wait for maybe another week or so, just to keep an eye on it. If it drops another 5%, then maybe I might initiate. If it goes to $185 per share, $186 per share, I might start nibbling, just adding a little bit here and there. I like the business model. I like the snack side of things. This has been on my watch list for a very, very long time. So now we get an opportunity, hopefully, to add to the portfolio. So I will definitely do that when basically time comes, inshallah. And as always, I'm going to try to, of course, as soon as I do that, I will let you know, to be transparent and so on. Please make sure you're doing your own research, okay? Or I'm not a financial advisor. I'm just going to sharing some information for entertainment purposes. So please always do your own research, inshallah. I've added to a few companies today. So I've added to a bit of AstraZeneca. I think I bought less than 1 share, and I've also added to Medtronic. Is now own almost 50 basically shares of this company right now. It's been down quite a bit. My healthcare sector is not as much as I wanted it to be, so it's getting there though. So as you can see here, the healthcare is about 15% of the portfolio right now. So the industrials is actually 23% and 24% for information technology. So I want to consumer staples. I'm going to put this hopefully in the next, and if I can add this company, hopefully that will move it up to at least 15%. So these two, again, I love the healthcare and I love consumer staples, because these are the companies that do well in for example, in recessions kind of situations, because healthcare, of course, is important. Consumer staples, majority of the people will go out there because they need to eat, they need to buy these products that companies sell. Of course, they will try to save money by not buying brand names or whatever, but again, it's a kind of recession proof stocks, if you like. So I'm going to stop the video here. Have a wonderful day. I've got a few more videos planned, inshallah. The next couple of days I will release those. So yeah, let me know if you have any questions. Please help the channel by liking the videos, come joining us on the Patreon account. Have a wonderful day. Assalamu Alaikum.